I think I found an incredibly easy way to look at Bitcoin price. So for altcoin holders, this could act as a super smooth, clear, and a highly probable guide. And the best part, Bitcoin is toying with it right now. So the trigger point is going to activate soon, and we're going to know what Bitcoin's going to do, and for a while upcoming. And especially if you're an altcoin holder or somebody who wants to get exposed or more exposed into alts, or if you're somebody who is in alts, you didn't sell, but you've been watching your altcoins go down, and you want to realize, should I make the choice to back out now before it goes down more? If you're any one of those three groups of people, this video is going to be for you. Let's go get some Bitcoin. All right, we are looking at I'll show you how to do this for new viewers. I'll show you how to set this up exactly. And this is not clickbait. I think this could be the absolute easiest way to look at Bitcoin price. This is the 2-day chart, but if you're on a form of Tradingview where you can't have that because you have the free version and you can't do 2-day, just multiply what I'm getting ready to say times 2. So what's 10 times 2? Okay. What's 21 times 2? Okay. So that's it. I have the 2-day 10 and 21 EMA fill. You can just type in EMA fill and pick one. Try to pick one that only has 2 options. Mine looks like this. 10 and 21. Yes. Here's the 64K and 69K top. Here's the 14K top after the $3,200 low in 2018, 2019, New Year area. This is June of 2019. Okay. This is the 20K top of December of 2017. Price went way up there, like that. I'll just keep 19.3 there, and I'll take price back off. Oh yeah, and here's the 13K top, or 1300 top of the very first end of the very first bull market. There were no fake outs. Once this turned red, the top was in. 0. Okay, it's red, it's green, it's red, it's green. Okay, now go down. No, one flip, it was the top. That's back in 2013 when price was hitting $1,300. $20K top. Once this flipped red, the top was in. 0, back and forth wobbling, flipping red, flipping green, like a, yeah. 14K top. Look, once it flipped red for the first time, the top was in. 0 fake outs. Almost had fake outs. Close too, but 0 fake outs for that macro top. $64K top. Okay, same thing. Once it flipped red, the top was in. $69K top. Let me zoom out so you can see how it has twin tops. $69K top. Once it flipped red, top was in. Currently, it just flipped red and under a super macro mega channel line, of which there are only 5. A bottom, top, one here, a quarter, a 3/4 line, a 1/4 line, and a middle line. Price has only interacted with this line at $7, at 20K, going down on a dip from which it bounced, and then back up at 55K. and now it's interacting with it at 63K. This is the 4th time in history price has interacted with it. And it's below it. And it got rejected by it. And that just flipped red. But it's not a perfect indicator. It doesn't guarantee it's a top. It just says for every macro top, you had no fake outs. It didn't wobble. So if you go to a smaller time frame, it'll flip colors like multiple times, right? So I landed on the lowest time frame for which it had 0 fake outs at the tops. But pullbacks on the way to the top did flip it red barely. So that would be a potential false alarm. That was a false alarm. But right before it, when it flipped up, it did get the entire move up to now. Literally. So when the last time this flipped green, when price was around 27K, this got the signal all the way up from 27K. Flipped red, got the trend correct for a month and a half. So now we have some middle examples. It worked, but not that long. Flipped red, got the trend right for a month. Okay. So it doesn't guarantee it's going to go down because it could be a fake out on the way up to higher highs. And if it does flip back green, it's going crazy because the last 2 times it flipped green, it went crazy. Last 3 times it flipped green, it went crazy. That's just a skim play. Last 5 times it flipped green, it went crazy. All right, so now, new viewers, this is where you might come to appreciate my channel relative to other content creators you watch. So what are we going to do with this information? And is this music way too freaking loud? How is this information going to help you? Why is this so easy? Why is it predictable? You just showed me all these times it faked out and didn't get it right. Who is this blonde dork up here? He's contradicting himself. No, I'm not. Watch. Check this out. Put price back on. We know that if this flips back green, which as it's flipping green, candles begin closing on top. If this flips green, then every other single time it flipped green, it went way up. So decision-making trigger point right there, and it's really close. But because it's red, it might be easier to assume lower prices until you get candle closures here and no action taking. So the thought process of having no actions taken until it flips green, because candles could close above here. As that's red, it stays red. The next 2 day comes down. But when you first get a closure, that's when you're not only looking down, you're also preparing for up. You just prepare. It's trigger point for different preparation. And I'm trying to make it very easy because the time frame in which it's closing above but still red is very small. So that's the trickiest area, but it won't stay like that for very long. So everything else is black and white besides that little gray area that by default can't last long. Everything else totally black and white. Totally a fantastic predictor of if I'm an altcoin holder, if I want to get exposed now, but I'm not sure if I should, or if I held through this dip and I think I might want to sell into a lower high or sell soon before it goes down more, what should I do? Well, for each 3 category of people, very simple. Assume down until candles close above it. Then don't assume anything. Get poised for either, because a decision has to happen. Like, it's got to start moving. It's going to jiggle around. The pressure's hot. I'm getting ready to make a choice. That's when you're checking your phone more than once an hour in that small window. If and when it breaks above, and that flips green with high levels of relative crypto confidence, you can have a guide for what's coming next. Very, very highly probable that it would be a lot of upside. And for a while, it would automatically make it highly probable that you're going to take out this high at minimum. Yeah, at least take out that high. That probability would be very, very high once this flips green and candles are above it at the same time. Black and white. Assume down until that trigger point. Look both ways. If it ends up flipping green, booyah. How do you like that? So you can use the 1-day chart with the 20 EMA and the 42 EMA. Make your own EMA cloud. And if you want to get fancier, even though I do suggest, so here's one tidbit that you can do. You can continue multiplying down. So if the daily is times 2, the 4-hour is 6 times smaller, so it would be times 12 for the 4-hour. $10 times 12, 120. Uh-oh. And now you can see nothing at all. What did I do wrong? Oh, there we go. Now you can see the exact same thing, but with smaller candles. So you can see how each smaller closure interacts with it. And the reason why I'm suggesting that is because I've been looking at the algorithms behavior with prices behavior per the algorithms that are mostly moving it. And what I've seen is a strong transition from how do these small candles interact with big items like this. So if it hits it and bounces down on small time frames, that holds more weight in analysis previously than the daily closures, which were mostly like it was half fake outs, half continuation to one side. So completely unreliable. But the small candles bouncing on bigger stuff did work. Right now, what is working are the closures of the 4-hour and the daily and the monthly. So taking this down to the 4-hour, that closure right there suggests that this should bounce down. It specifically closed below it, and that's a small candle closure on a big time frame. But we know, or quote unquote, we know, I personally am very confident that the algorithms are basing themselves off of closures heavily right now. And this will change the shelf life of what I'm saying. It could end tomorrow, but it's been several months this has been happening. And when it goes away, I'll cover that on my channel as well once I see the closures are primarily being used as fake outs, or you just can't tell. Right now, the 4-hour, the daily, and the monthly closures seem like the most reliable thing per any trigger points on your chart that you have. More so than it's above right now, it's below right now. Well, if it's right at it, if it's right at that point, it doesn't really matter if it's right above it or right below it. It only matters if it closes, that candle closes right above or right below. That's the difference. If it's close to a trigger point or an area of interest, it doesn't matter if it's just above or just below. None of that matters. If it's in the middle of a candle that has not closed. And where you can use that is the 4-hour, the daily, and the monthly. The monthly with this EMA fill, not very helpful. However, 4-hour and daily are going to be extremely helpful for you right now, even more so than the 2-day closures. So using the 2-day with this on the 20 EMA and the 42 EMA could be the absolute easiest way to have a black and white guide with an exceptionally high probability of guiding you the correct way. I hope you liked this video. If you're new and you liked it, hit the thumbs up, and returning viewers, you know what to do. Help out your content creator. Links to the Discord community are in the description section, and a little information about the YouTube tiers. You can check that out with the blue button join down below. It'll pull up a little information on what we do there. See you on the flip side. You just got Timified Worldwide.